Hello, Internet family. The IRS is wide awake, and if you've been watching the news, you've been seeing them issue tax liens and tax levies. Tax liens and tax levies are two of the most common tools that the IRS uses to ensure that they get paid. So, in today's video, I want to explain to you what a tax levy is. But before I get started, let me introduce myself to those of you that may not know me. My name is Timberland Bowens, and I'm an enrolled agent licensed through the Internal Revenue Service. I'm also the owner of Bowens Tax and Bookkeeping Solutions. We are a virtual firm based in Louisville, Kentucky that specializes in resolving tax issues. So let's get back to our topic. What is a tax levy? In technical terms, it's when the government seizes your property or your right to your property to make sure that they get paid. In layman's terms, a tax levy is when you owe the IRS, but you haven't paid them, and you ignore all of their attempts to get paid. But a tax levy isn't the first thing that the IRS will go for. First, they'll send you a letter. Then they'll keep sending you letters. They'll request information if you're unable to pay. If you ignore these requests, don't pay, that's when the issue gets levied. Not the issue gets levied. That's when the levy gets issued. Excuse me, got a little tongue-tied there. Now, there are two types of tax levies that you need to know about. There's a regular levy, there's a continuing levy. So let's look at the regular levy first. The regular levy is the government's right to seize your property, and any property that they seize at that time is theirs. I want to make that distinction and give you an example with a bank account. Also, with a regular levy, this is not on wages or commissions. So let's go back to this bank account. Let's say we have taxpayer Bob. Bob owes the IRS $10,000. But at 3:00 p.m. on Friday, when the IRS issues that levy, Bob only has $6,000 in his account. At 4:30, Bob puts an additional $4,000 in his account. Because the IRS issued the levy at 3:00 and there was only $6,000, they can only take that $6,000. Now, something else important to note, it usually takes the bank about 21 days to give the IRS the money that's been levied. Any interest that accrues in that time also belongs to the IRS. Now, remember I said they can only take that $6,000, right? What they can do, and what they most likely will do, is issue another levy on that bank account so that they can get all of the money to satisfy the debt owed. So let's look at a continuing levy. A continuing levy is on the wages or commission until the government decides to release it. This is commonly known as a wage garnishment. And let me tell you, it is absolutely awful. And I say that because they can garnish up to 85% of your wages. So what they do is they give you a standard deduction. So essentially, they tell you how much you can live off of, and they take everything else until your debt is satisfied. So you go in, clock into work hard, and then they take the money that you worked hard to earn until that debt's paid off. If you're in a situation like that right now, believe me, I understand. It is crippling you financially. I urge you, please reach out to me and my team at Bowens Tax and Bookkeeping Solutions. You can book an appointment with us at www.bowens, B-O-W-E-N-S, tax solutions, because we have more than one.com. So that's www.bowenstaxsolutions.com. So we can take a look at how we can get that levy removed and also get this tax debt behind you. Please book your call today because we are only taking a limited amount of cases now each month. We have to get this tax debt behind you, but you have to take the first step and book that call.